I'm going to hit record. All right, so I am Chelsea Cohen. I am the co-founder of SoStocked and started as an Amazon seller, been selling on Amazon since 2014. Really needed to grab a hold of my inventory. And so for the past 4 years, I've been really focused on inventory, kind of obsessed with it. It's actually a very interesting subject when you start to dive into it. And it's most interesting because of how much more money you can make. There's a lot of money that people are leaving on the table with regards to inventory. And so my goal is to help more people to stay in stock and to reduce the costs associated with inventory so that they can scale faster, reduce some of that stress that I know a lot of people go through when they are stocked out. And then, of course, being able to reach your own financial goal more quickly. All right, so let me go ahead and share our screen. Okay, so we're going to be, like I said, talking about up-leveling inventory. We're talking about flexibility and optimization and how you need to build out your logistics sources, how you need to refine some of the processes that you're performing in the aspects of forecasting and inventory planning. And then what are those things that you can do across the supply chain to be paying less in terms of your landed costs? All right. Got a couple more people who joined. Hi, everybody. Hi, Tim. Hi, Cam. All right, let's go. So I did introduce myself a little bit, but just to kind of reiterate, I've been selling on Amazon since 2014, been really immersed in Amazon inventory actually for close to 4 years now. I've spoken to hundreds of 6, 7, and 8-figure sellers specifically on inventory management and on inventory processes and stockouts, and really found some common denominators, and that's what I love to teach about. Written over 50 articles on inventory and supply chain. I've been on dozens of podcasts, and we have over 1,000 people using the software and are currently recommended by top masterminds, influencers, agencies, and aggregators. Inventory, for whatever reason, is something that I really am fascinated and interested in terms of especially the aspects of inventory that mean that you get to make and keep more money. So let's go ahead and talk about what the #1 inventory mistake is that sellers make. Essentially, the #1 mistake that sellers make, it's something that kept recurring as a theme, both in my talks with sellers, as well as I have a copywriting agency, and we would do work for for sellers. We even had an 8-figure seller who made this mistake. So it's not just beginners that are making this mistake. It's across the board. So these mistakes are being made. They're being made by PPC agencies. They're being made by brand managers that you pay your hard-earned money, and they're still making these mistakes. So that is marketing inside of a vacuum. We're very much a marketing-focused community, and it's usually market first, scramble to get inventory back in stock. What ends up happening is that if your marketing team and your inventory team are not coordinated, you end up marketing yourself into stockouts. And that's something that's very common. Like I mentioned, PPC agencies, I'd ask them, have you ever stocked out your clients? And the answer was invariably yes. And a lot of PPC agencies and brand management companies used to not want to touch the inventory side of business. They didn't want to have to worry about it. And we're seeing a shift and a trend over the past couple of years of more of these agencies are starting to help to facilitate inventory management. Some of them are even paying for inventory software on an agency account basis because their money is directly tied to your money and your success. And so if they don't take responsibility for the inventory side of things, they're starting to see how it's really affecting both their clients' bottom line as well as their own bottom line. So we're going to talk about this concept of marketing and inventory working together. Those two teams need to work together, especially because restock limits came about. And I know that restock limits have eased up a little bit, but who's to tell during Prime Day or during our Christmas rush, what's going to happen. So we all need to be prepared so that we can avoid stockouts, but also avoid overstocking, which can lead to a whole series of disasters as well. All right, so we're going to talk about the vital marketing coordination points. The first one is, these are essentially 5 reports that need to be exchanged between your marketing and your inventory team. And the first one is your marketing plans. This is something we call inventory-minded marketing, right? Coordinating your inventory and your marketing teams. This is the Inventory-Minded Marketing Planner, and this is one of the free tools that we offer. If you go to sostocked.com/tools, you'll find the Amazon Inventory Planner, and you can download that there. This is what it's composed of. You need the marketing team to, on every SKU they're planning to market, give some data to the inventory team. So one of the things is, how are we looking at the velocity? Is it a 30, 60, 90 day? Are we looking at last year's sales? What is that velocity based on? Because some products are very seasonal, and so looking at the past 30 days may not be accurate for a product that's coming into a seasonal sales cycle. So what is the velocity? And then after that, you want to look at trend. Are you looking at analyzing the product based on the fact that it's maybe on an uptrend, or maybe it's on a downtrend and you're starting to wind that product down? You can look at it year over year. You can look at it month over month, quarter over quarter, but you want to make sure that if you want to look at a trend, that's being applied and it's indicated inside of the report, especially for those guys who, I know we have some people who are already SoStocked users. This is a tool that really coincides with all the features that SoStocked offers. So getting your marketing team on board with implementing this marketing planner can make a huge impact in synchronizing the marketing and the inventory side of things. That along with the inventory reports that we're going to go over. The sales growth. Sales growth, this would be something where you're planning on doing a specific marketing campaign for specific ASINs. Let's say PPC. You would log in all of the ASINs that you're going to run this PPC campaign with, and what percentage increase you think those sales are going to grow based on this campaign. Then you have lightning deals. You can also consider this just any sales event. For example, an influencer marketing campaign or an email campaign, and you just pick the date range. Maybe it's just a 1-day lightning deal. Maybe it's a deal of the day. Maybe it's an email campaign that's going to last through Easter, which is coming up. And so pick that date range and then the total number of units that you think that you're going to move based on that particular sale, because that's going to have an impact on when those reorders need to take place and how much needs to be reordered. Then we have seasonal sales spikes. This is a date range. You can give it a name, so Halloween or summer, and then what is the increase that you predict in terms of those seasonal sales spikes. This actually, we have something coming out soon with the software. This is something that is already implemented, but then we have some more detailed and specific seasonality coming out very, very soon with the software that has been being requested. So all of these together is going to help the inventory team to ensure that there's enough stock to ensure that the next order being placed is going to cover this type of promotion, and to also let the marketing team know if they're about to market products that are getting ready to stock out. That's one of the issues, is if they say, you know, I'm going to promote Mother's Day, a Mother's Day sale, we're going to give 20% off coupons, and then the next month you're running out of stock. Well, you just wasted 20% on all of those sales that could have been full price if you had known that a stock out was coming if you ran that sale. So that's something to, in terms of putting more money in your pocket, it's not just about preventing that stock out, it's preventing that stock out and preventing yourself from spending a ton of marketing money on a product that's about to stock out. You want to try to sell for as much as possible, make as much profit, and avoid a stock out if you can. And only when you have the stock can you really blast a marketing campaign like that. All right, the next is stock out risk report. So we're getting into the reports that the inventory team needs to share with the marketing team. Stock out risk report, it's exactly what it sounds like. It's what products are going to stock out, for how long are they going to be stocked out, and at what date do we expect the stock out to occur. This is for those of you who are using SoStocked. This is a report that is already in the dashboard. It's a default report, stock out future. You could change it to read stock out risk report if you want, but this is already set up in there. For those who don't have SoStocked, we have a simple calculation for this. You take your total inventory, and if you're looking at, you really want to know if are you going to stock out at FBA, so you can do it on an FBA level, or you can do it on a total level. The total level will indicate when you need to order. The FBA will indicate when you need to transfer from your third-party warehouse if you have one. So you have your total inventory, then you divide that by your daily velocity, how many sales per day. It's going to give you how many days of stock you have remaining. And then from there, you'll be able to look out into the future and know what that stock out date will be. And if you don't have inventory coming in before that date, then you know that there's something that you have to do to try to either avoid that or have another plan for if you are going to, in fact, stock out. So this report would go to the marketing team. The marketing team can use this to decide whether or not to market those products, maybe take those products off of their marketing list, kind of turn down some of those ads. Of course, you want to make sure that you're not losing ranking, but if there's a way to avoid that stock out, for example, if you had 9 days of stock out being projected, that 9 days, you might be able to make more profitable sales by turning down the ads and stay in stock. But if you've got a product that's going to be stocked out for 30 days, you probably want to have a different strategy where you sell through as quickly as possible, boost that ranking, stock out, and then close your account until your inventory comes back into stock, if you have that as your scenario. So the marketing team can decide this. The inventory team just gives this data, and the marketing team needs to use this data when they're planning out their marketing strategies. Next is the slow sellers report. These next three reports are going to sound pretty similar, but stay with me. I'm going to explain exactly how they're different and how the marketing team will use these reports. So slow sellers report, you essentially are looking for products that aren't total failures, but they also aren't doing very well. I refer to it as the move it or lose it SKUs, right? You either need to get this product to start moving quickly, or you're going to need to get rid of it. So they're in kind of this limbo of, is it going to perform? Is it not going to perform? And this is kind of the red flag report. This gets sent to the marketing team, and this is how we set it up. These reports are not defaulted in SoStocked. So if you want to set up these reports, you would use the filters, and you would use the adjusted velocity between a range, a minimum and a maximum. The reason we don't have those reports set up is that everyone's minimum and maximum is going to be different. So for this example, let's say the maximum is 20 and the minimum is 5. So anything between 5 and 20 is a slow seller. It's not a complete loser. It's a slow seller, and it needs to get above that 20 units per day mark. So that would be how you would develop that report. To use this report, the marketing team will take this and they'll look at it, and they'll know that they need to ramp up sales. They need to move this into a better range. The idea is to clear out all of these and not have any products within this range because you've moved them out and up above that threshold. So that's what the marketing team should do. They should take this report, and these SKUs should be incorporated in their marketing campaigns. Then we have, so that's the slow sellers report. If this report is not properly handled and analyzed and worked on a regular basis, it could fall into this next category of sales, which is the liquidation report, right? The liquidation report is products that are below that low threshold, right? Below, let's say, 5 sales a day. Anything that's doing 4 sales a day, 2 sales a day, those are ones that are really a drag on your inventory. You don't plan to restock them. So this report will help you to see which products you either need to sell through or just remove from FBA altogether. The way to use this is sending this to your marketing team, and then your marketing team will devise a plan to figure out how to move them. I don't recommend removing them from FBA if you can sell through them. The only reason you would want to remove them is if there is some emergency. You're about to be charged a whole lot of money for excess inventory fees. You're about to be, you're trying to get inventory in, but your restock limits are being blocked by this liquidation inventory. And so that would be when you would remove it, but it's better to sell through it for a couple of reasons. One is you're recovering some of that money. Another is that you are potentially increasing your restock limits. You're boosting your restock limits by boosting your sell through, because your restock limits are looking at all sales across your entire catalog. So if you can boost your restock limits on the way out with this product, that actually helps you to see that this product is an asset, even if you're losing money, because inventory is always considered an asset on our books from an accounting perspective, but it can become a liability if it ends up costing us more money than it's making us, right? So if it's ending, so if you look at the fact that it's going to cost you more money, that this product is actually losing you money, well, we might as well use it to at least buy restock limits. If we can't make our money back, then at least let's buy restock limits. Let's increase our inventory performance index and increase our sell through. So those are the reasons I recommend selling through and only removing if there's some sort of an emergency case where you need to clear out that inventory right away. All right, the last report is the FBA overstock report. Generally, you'll see product from the liquidation report and the slow sellers report on this overstock report, but that's not the only product you're going to see here. You may see some best sellers on this particular report. This is your excess inventory. What it might look like is looking at your days of supply, your FBA days of supply, and maybe for you, anything over 90 days of supply is considered overstock. You want to know about this because, like I said, it could either become an asset or a liability. It could either take up too much space or it could cost you too much money in storage fees. So what you do with this report is this report gets sent to the marketing team. The marketing team should see this as an asset. This is money to spend. So just like we have money to spend on marketing and PPC, think of your inventory as money to spend. We have inventory to spend to drive that ranking up. If we have a bestseller and we want to gain a better position with a specific keyword, then we can target that keyword and we can push some of that excess inventory and move it more quickly, turn it over more quickly. It'll help us with our restock limits. It'll help us to boost our ranking by increasing our sell-through, increase your IPI score, and also help you to clear out space and avoid excess fees. So that can be done across, whether it's a slow seller or it's a best seller. The best case scenario is if you see a product that is on your slow sellers report, right? That's the products you need to increase ranking and increase sales on. And that same product is on your overstock report. It means you have the inventory asset to drive those sales to get that product, one, off of your overstock report by moving that inventory, and two, out of that report, out of that slow sellers report, because you've increased the ranking and increased the sales on that product. So that's kind of the best case scenario when you're looking at items on two sides of the report. All right, so let's go ahead. I'm going to kind of switch gears. We're going to talk about something called logistics flexibility. And a couple of weeks ago, I did a webinar and I focused on logistics flexibility. And someone told me that once they adopted this plan, they had not stocked out since. So I am very much a proponent for logistics flexibility. And that's essentially, I'll break down these specifics, but it's essentially having various different plans. And, you have a plan A, B, C. What's going to happen? Are you asking yourself, what if the boat doesn't arrive? What if Amazon checks my stuff in late? What if? All of these scenarios, you have to have a plan B. You have to know what you're going to do if that happens. So that all starts with what I call the golden rule. And the golden rule is, for some reason, having a lag here. Okay, the golden rule is never let anyone have all your stuff. I learned this the hard way. In 2015, I put all my stuff on a truck and sent it into Amazon, and Amazon did not check it in until after Christmas. So I had tens of thousands of dollars in products that were essentially stuck in a warehouse, unable to be sold because Amazon didn't check it in. And that's very common last year. people were saying 5-6 weeks until Amazon actually checked their stuff in. So this is what you need to do to avoid putting all your eggs in one basket, to avoid letting someone have all your stuff. Let's say you buy a container load, and you generally order a container load and you ship a container load across the ocean, but that container sits somewhere outside the port of Los Angeles for 2 months. That is a very precarious situation to put yourself in. You have all of your inventory sitting on that boat and you can't do anything about it. Instead, by adopting flexible logistics, you would order a container load plus a month or 2 of additional inventory. Keep that inventory at your supplier's warehouse, which oftentimes you will be able to get them to hold inventory for a couple of months at no extra charge. So you're not paying for those storage costs. And then you have that inventory just in case something like getting stuck at the port happens. If you need to air freight inventory over, you have the inventory to do that. You don't have to get more inventory produced to be able to get yourself out of that problem. A lot of times, obviously you're placing a larger order, so that's more cash being outlaid. A lot of times your seller, you can negotiate with your seller and say, I only want to pay the final payment on the ocean freight that ships, and then pay the air freight. If you have that 1 to 2 months, pay that when it actually leaves the warehouse. So that's often something that you can work out to further help your cash flow. Then of course you can send it to your 3PL, you can send it to FBA. And then taking this concept, you want to move this concept one step further, and you want to take the same concept and move it into your local logistics infrastructure. So you have your 3PL and you send less than truckload or you send full truckload. If you put it all in that one truck and Amazon decides that they're not going to check it in for 3 months or 6 weeks or even 4 weeks, whatever is something that you can't possibly handle. If you are stocking out and you have that problem, it's not something that it puts you in a situation where you can't do anything because everything is on that truck. So leave extra inventory at your 3PL. It's called, the term you might have heard is just in case inventory rather than just in time inventory. Just in time meaning that, right before you stock out, your inventory arrives. Everyone's switching to just in case inventory. So 3PLs should be holding some just in case inventory. We also call it buffer stock. So those of you using SoStocked, this is your warehouse buffer stock. You have FBA buffer stock and warehouse buffer stock, that extra just in case inventory. So if you do have that situation where Amazon's just not checking your stuff in, then you have the option to send small parcel delivery, which is a lot faster, a lot more reliable, more expensive. So you don't want to incur that cost unless you have to, just like you don't want to send air freight unless you have to, but you have that extra inventory just in case. And then last piece to the puzzle is having some sort of a fulfillment solution. Even if Amazon's your only sales channel, it shouldn't be your only distribution channel. And so if you don't have a fulfillment center, it becomes your only distribution channel. When Amazon's not checking your stuff in, your listing can still be live and you can turn on an FBM listing and you can still continue to send inventory or send products to your customers, even though Amazon is not currently checking your stuff in, right? You could be stocked out and on Amazon, but not stocked out completely. So just kind of to recap, over order and put your excess inventory at your suppliers. Renegotiate payment terms to reflect not paying for inventory unless it ships and possibly to have them hold that excess inventory for free. Split a shipment to air freight if absolutely necessary, and then apply the same to your 3PLs for truckload or small parcel delivery. All right, feel free to type in questions in the chat. I know these are concepts that kind of you got to wrap your head around a little bit. But like I said, we've had people that have really great success with this particular method, this particular system of handling inventory. And so we want you to give it a try, see if it helps you to avoid some of those stockouts. All right, lastly is a concept that I refer to as little hinges move big doors. It actually is the opposite of another saying that you may or may not have heard, which is death by paper cuts. Death by paper cuts was why I started SoStocked. I started looking at my profitability and saw I was bleeding money from various different places. It wasn't just one place. It was a bunch of little ones. It was 3PL costs. It was, air shipments, stockouts, all of these things that I was bleeding money. And I needed to figure out how to handle that. And the biggest piece that I saw was inventory. And obviously there are other things, and that's one of the passions that I have is let's find all of those places where you're bleeding money. But the concept little hinges move big doors helps to reverse the death by paper cuts. If you can find ways to add, let's say, regain an extra 5 cents, 10 cents, 15 cents on your landed cost and increase your profit, what that'll do across your entire catalog, those little savings, those little hinges create a whole lot of profit. And so I want to go through where you can find some of that money and regain some of that profit and how to do that, how to implement it, and then the impact that it can make. All right, so the key to recovering profit, size really matters. We're going to dive into one specific aspect of business that a lot of people are not analyzing hard enough. I do know that some of that has shifted a little bit with the recent update that happened in January, which is the new dimensional weight factor, which we'll talk about. But I'm going to talk about how size is everything when it comes to your fees. First of all, your unit packaging turns into FBA fees. And again, the new dimensional weight factor just completely kind of blew that up. I had a friend who had their fulfillment fees increased by 94% overnight. So we'll get into that. If you're not familiar with that, we'll get into it and we'll do kind of a case study on that. The next is your carton packaging. 3PLs charge you carton fees, carton handling fees, carton labeling fees. So the more cartons you have, the more you're going to be paying for every single order. Palletizing is the same way. Palletizing, you get your inventory pulled out of your container and then they have to put it on a pallet, and they're charging you to put it on a pallet, and then they're charging you to store that pallet, and then you pay to ship that pallet. So the more pallets you have, or the less efficient your pallet packing is, the more you're paying in storage fees, but also handling fees. And then containers, we know that container costs have just completely ballooned out of control in the past, 2 some years. The shipping fees, we can't change how much we're being charged for each container, but what we can change is how much goes into each container. So all of these end up being, those death by paper cuts, those little tiny fees that all add up to a lot of money. So let's start with the unit packaging. For every single SKU, you're going to be paying for the size of that SKU. There's a couple of ways that you're going to be paying for it. And the bigger the product is, the more you're going to be paying. We know that FBA fulfillment fees are based on the product size. The other aspect is the storage. You can, if you've got the same size box and the product is smaller, you can fit more product into that box. So if you can get your product to be smaller, let's say there's some people who have, this is a good example, beauty products. You open it up and it's not full. It's not up to the brim. Consider moving it up to the brim. I buy arborio rice to make risotto. Well, some rice comes in a package that has a little bit of air on the top. The one that I prefer, not because it's packed more tightly, but because it's a better brand, but they vacuum seal it. So it is as compact as possible. Can you vacuum seal your product? Can you fold your silicone product? Are there ways that you can start to condense that product and get it into a smaller space? I have a friend who was selling sunglasses and went from a big bulky hard case to a soft case, and was able to reduce fees all along the line, fit more units per carton, more units per pallet, more units per container. It all has this huge ripple effect. So this is the foundation of everything. And Amazon is doing a lot of different things, which we won't get into all the specific. They're pushing a lot of initiatives that are trying to encourage you to reduce these sizes. So you definitely have a lot of benefits to being able to figure that out for your business. And I suggest go ahead and test it out. Try buying some of your products and playing around with them that way. All right, now we're going to get into the carton and pallet optimization. So like I said, if you can reduce the total number of cartons and you can reduce the total number of pallets in the same order, you can reduce your savings significantly. This is something that I started playing with about October of last year. And in starting to dig in, I started to think, you can't really figure out the best carton size if you're not looking at it compared to the size of the pallet. And you can't figure out the size of the carton dimensions without looking at the size of your unit. So ultimately, the only way to figure out your optimum container size and your optimum pallet configuration is to look at the unit size and the pallet size and kind of work it backwards to get to that perfect master carton dimensions. And then how do we arrange those on your pallet? We actually have a tool for that. If you go to SoStocked.com/tools, there's a free tool called it's on there, it's listed as the Carton Pallet Calculator. And it's the master carton calculator, but it also figures out how to build your pallet. So it's going to give you a pack list. It's looking at those basic factors, and it's doing a lot of calculation. There's a lot of math involved to run those calculations, but also to run them against the Amazon guidelines, right? Make sure it's within the correct weight and size, following those guidelines. And that's going to give you a pack list. How do you build out your cartons? How do you build out your pallets? And also, what are those savings? What's the before and the after savings? And some people have found over 200% savings. Some people were using less than 50% of the entire pallet volume. So if you could stack, if you could stack a specific amount up to the top, or you could use, 80% or 85% versus 48% or whatever they were using, you can put a lot more units per pallet. You can cut down. Some people have cut the number of pallets in half. That cuts the savings in half, the storage in half for those particular products. So this can be very, very impactful. I suggest you go ahead and play with this tool. All right, then we have, like I mentioned, optimum packing for your container. If you have to pay $10,000 per container, you want to get as many units into that container as possible, because that $10,000 is going to disperse across more units and increase your profit in that way. There's a free tool called peertopeer.com/load calc. You can see the link down there. Go ahead and try that free tool out. We have a lot of people who use that tool. Eventually, we'll be rolling this type of a tool into SoStocked itself. But for now, this is a really great tool for you to be able to plan out your container shipping. Now let's take a look at how this all shakes out. And if you are looking at the possibility of ever exiting your business, something to consider is that every dollar that you save, let's say you're going to sell in 18 months. Well, now is the perfect time to start optimizing your supply chain, optimizing your forecasting, because every dollar that you save, every dollar that you regain can turn into $5 upon your exit. So it's going to take you a little bit of time, 6-month runway, let's say, to get all these things optimized, and then go into that next year, that rolling 12 months, making as much money as possible, keeping as much money as possible, so that when you exit with the largest possible payout. Because let me tell you, I am friends with some of these aggregators, and they are doing this. So instead of you putting this money in your pocket times 5, they're turning around and they're making instant equity by reducing the cost that you neglected to reduce before you sold it to them. So that's instant money in their pocket. If you stock out $50,000 stock out, well, that's $50,000 back in their pocket if they can avoid that stock out next year. So let's talk about, carton optimization. There was a scenario of carton optimization that I ran that was $82,000 in carton optimization. No joke, crazy situation. And this is partially, or in large part, because we all rely on our suppliers to figure out the carton dimensions, and realized very late in the game that one of our products had an immense inefficiency in its carton optimization. So we optimized that. So $82,000 is a number that I'm going to throw up there, actual example. Then we have the exit. On exit, that's over $400,000. Pallet optimization, let's say you regain 15,000. That's $75,000 on exit. Air freight, avoiding air freight by using flexible logistics and properly planning and dispersing your stuff so that you are no longer doing just in time. You've actually got a good system to track when you need to order, right? That would be 250. Stockouts, avoiding stockouts. Say avoid $40,000 of stockouts. And this is not, these numbers are actually, we're starting to get into running numbers on how much people are losing on stockouts. One of the last ones that I ran was almost $130,000 lost to stockouts in a year's time. And looked at one best-selling product, 11 days of stockouts equaled $33,000 in lost revenue. So this is something that is very real to a lot of businesses, and you almost don't want to look at the numbers, but when you have a solution to implement improving them, it becomes actually extremely eye-opening. And so that would be $200,000 in lost revenue. That's over $187,000 in annual profit recovered that you can invest in new products, you can invest in marketing, you can invest in a new vacation for your family. And almost $1 million would be put back in your pocket at a 5x multiple upon exit. That's a lot of money that it's my passion to help other people, to help other sellers put back into their pockets, because I think that we all work so hard and we spend years on these businesses that it's high time that we make and keep more of the money that we're generating. All right, the last thing that I'm going to cover is the dimensional weight, which I talked about. The bombshell that came out in January of this year. This little thing that was slipped in, which people started to notice. If you haven't noticed this, you may not be affected by it, but there were a lot of people that were affected by it. And it's something that Amazon kind of slipped in when they published their annual update to fulfillment fees. They slipped it in there. But if you know what dimensional weight is, then immediately you became alarmed. And this is what dimensional weight is. It's a pricing system that carriers used to compare the amount of space a package takes up and the amount of weight it takes up, and combining those two things to create a new weight calculation. And it's because they want to be able to charge you appropriately. And if you've got a really, really heavy product, they may not be able to fill their truck completely full because there's these restrictions in terms of how much weight you can put in a truck that's going to be traveling the highways. At the same time, the size really matters as well, because you can only fit so many. It may be very light, and so they're not charging you a lot in terms of weight, but it takes up more room in the truck. Pillows, for example. So they need to analyze and kind of weigh the weight and the space and decide how much to charge you based on how many actual products could get into their trucks. So that is where the dimensional weight concept comes from and why shippers use this. That's something that Amazon recently applied to their fulfillment fees. The calculation is fairly simple. You have unit weight. This is for your actual product itself that's being sold and shipped to your customer. Unit length, unit width, and unit height. You multiply all those together, and then you divide it by 139. That's called the dim divisor or dimensional divisor. And it's just a number that is used kind of standardly by most places. Other divisors could be a little bit of a different number, but this is the very standard one and the one that Amazon and most other carriers use. So that's the general formula that you're going to find. So let's look at a real example. So here's an example of queen pillows. And this is an example of actual numbers for an actual product that I pulled off of Amazon. You have 2-pack of queen pillows that are 5.57 pounds. Amazon always rounds up, so we'll call it 6 pounds. Looking at the dimensional weight, doing that math, ends up being 21 pounds instead of 6 pounds. It's a huge difference, right? That's you go to about, I think, 60% of the profit margin on this product, and add the referral fee. 75% of your money is going to Amazon. And that's before storage fees and weight fees and PPC and cost of goods. This product all of a sudden overnight becomes unprofitable unless you do something about it, either raising the price or finding a way to vacuum seal. And it was actually pretty frustrating because Amazon just dropped this with no warning. So overnight, your products become unprofitable. And if you would filled up FBA with a bunch of these products, you kind of got into a bit of trouble. So the way that Amazon did it was really kind of a low blow, but par for the course, I guess. So here's a real world example of comparing two of the same type of product, queen 2-pack pillows, and how finding ways to reduce the size can make huge impact, not only on the fulfillment fees, but we're going to go over across the boards what was the impact that was made. This first one is sized in a way that it becomes large standard size, so vacuum sealing that product. Shipping weight before 2022 was 3 pounds. After 2022, it moved into being 12 pounds. So it is a significant increase, but it's still not as bad as the product next to it, which is small oversized because it's above that 18 inches. Before it was 6 pounds, now it's 21 pounds. So between 12 pounds and 21 pounds is a huge difference. And it's a huge difference in the size too. So here are the per unit fees. We have the fulfillment fees, product on the left, $8.83, on the right, $16.64. You go all the way down. I did the analysis, running it through the master carton calculator to make sure that there's as few pallets as possible, as few cartons as possible, that the shipping is optimized. This is optimized on both sides of this product. So we're optimizing these fully, and this is still the numbers that come out. The storage, container shipping, receiving, palletizing, box forwarding. On the left, you have $14.40. On the right, you have $26.10. Huge difference. That is $11.70 per unit. And the product that has lower fees is even charging more than the product with more fees. So all of a sudden you can see figuring out reducing your packaging can make a huge difference. So all across the line, figure out a way to, starting with your product size, can you reduce that? Looking at your containers, your cartons, your pallets, then your container shipping, using those free tools, and really focus on that. Start working on figuring out your supply chain, if you can do anything about being a little bit more flexible, and implementing inventory-minded marketing. I will give you again the link, SoStocked.com/tools. We have the inventory-minded marketing planner. We have the master carton calculator. We also have an FBA calculator that calculates your dimensional weight fees. So if you're curious if your product is being affected by dimensional weight fees, you can go ahead and jump into the FBA calculator that we have on SoStocked, on SoStocked.com/tools, and you'll be able to see what's happening with your products. All right. For anyone who does not know about SoStocked, I'll just tell you a little bit more about SoStocked. And you can also reach out to either our team at helpme@sostocked.com, or you can connect with me at sostocked.com/connect. We are first fully customizable Amazon inventory management software. We say built for sellers by sellers. And what we really mean is that we have had hundreds of sellers give us feedback. I've personally talked to hundreds of sellers, as has my business partner, and we implement based on what sellers need. And we also have a forward-thinking eye into the future on what sellers might not even realize that they need so desperately, like the master carton calculator. Over 1,000 happy customers. We do free data migration. So if you have another software you're using, or you're using spreadsheets, we can help to put that data into SoStocked if you need an extra hand, if you're a solopreneur or your team's just really busy. We do one-on-one onboarding consultations, showing you around the software, making sure you have it all set up correctly, and then just giving you some advice on how best to use the tool or how to apply some of these principles. Here's a little bit of the features. Here's our customizable forecasting, and that comes with various different features like restock limits, applying your restock limits to the forecasting calculation. various different ways of calculating your velocity, like we discussed in the inventory spread in the inventory minded marketing planner. Trends, sales spikes, stockouts, additional sales growth, making sure that that all gets into your forecast. And then my favorite, the inventory timeline, being able to actually visualize this. Not everyone is a numbers person. Not everyone is weird like me and loves spreadsheets. So being able to visualize all this, the ins and the outs, when you need to ship things, even if you see the little squares right there, maybe days when your supplier is not open, so you have to order earlier, like Chinese New Year, tracking all of this in one complete timeline. Then there's the order trackers. There's the orders and transfers tracking to be able to see when your items are going to, going into production. When are they on the boat? When are these ones on the plane? How many are there? When will they arrive? Giving you just a full overview of the entire process. Custom inventory dashboards. All of the reports we talked about in inventory minded marketing, the slow sellers report, the liquidation report, overstock, stock out risk report, those can all be built out custom inside of your dashboards, where you can see we have about 80 data points, I believe, 80 columns, and you can turn those off, turn them on, create your own custom dashboards to see exactly what you need to see and customize your own data. And then lastly, PO and transfer creation. So you can create purchase orders or orders to your warehouse to transfer inventory directly from the software with a couple of clicks of the button and send it straight to your supplier from the software. Just a couple of things that people are saying. This is reviews that we have on our Amazon App Store. Hands down, most accurate I've come across in 7 years. Solved 99% of our inventory challenges. I'm getting rid of spreadsheets forever. We're making much more money, which is one of the best things that I could read. Saving hours of time and really listening to what is needed. SoStocked, we have a 30-day free trial. You can jump onto SoStocked.com, check the floater bar at the bottom of the website. And again, if you have any questions about anything, go ahead and reach out to us. You can connect with me, SoStocked.com/connect. If you are going to connect with me, just shoot me a message. Let me know who you are. That way I will accept your friend request. I get a ton of friend requests and a lot of them aren't necessarily people that I know. So I'd love to know you. And so go ahead and shoot me a message if you are going to connect on socials. Facebook and LinkedIn are kind of some of my more frequented socials personally. All right. I guess that's it. If you have any quick questions, go ahead and post them. Otherwise, we will go ahead and wrap up. I'm going to wait a couple of minutes for anyone who has any last minute questions. All right.